Welcome back to another video. In this one, I'm going to be providing you a step-by-step guide with examples and a free PDF trading plan linked down below of essentially the ICT OTE swing trading strategy that a member of the Rise Trades team used to bank an incredible 19R month in February, the month after joining us, and then in March went on to do another 15R. Okay, so 19R and 15R in consecutive months after joining the community. So my challenge to you is to dedicate the next 3 months to testing and executing this strategy. Less trades, but higher probability, less chart time and less stress, and I guarantee you will get better results in your trading. But yeah, basically this is just using a version of the ICT 2022 model, but refined for the higher time frame and swing trading. This trading model is perfect for someone who works full time. I personally traded a less refined version of this strategy when I was working full-time 5 or 6 years ago. I actually started trading 9 years ago, as you can see from some of these screenshots I just found from emails of a margin call on my £100 account at 18 years old. Basically, this strategy is super simple to apply, just focuses on a few ICT concepts that when applied consistently over time, yield amazing results. There's no reason you can't scale to 6 figures in funding whilst working full-time with this strategy. So this is the trading plan, the ICT OTE or optimal trade entry swing strategy. First of all, let's get your charts set up correctly. So of course, OTE stands for optimal trade entry and relates to the Fibonacci retracement tool with the following settings, as you can see here on the right. I use the settings, obviously 0, 0.5, which is the midpoint, which determines our premium and discount levels of the trading range. Obviously, anything above is premium, where we want to look for shorts. Anything below is discount, where we look for buys. Then we have the 0.62, 0.79, and then the midpoint of those with the 0.705, which is my favored entry level as it gives an adequate risk reward of 2.4R each time, and ICT calls it himself the sweet spot, where he likes to see price trade to. And then a refresher for fair value gaps, because they are important within this strategy, as we want to see a fair value gap in premium or discount to ensure that there is displacement. But the majority of you can skip forward from this part because you will be familiar with fair value gaps, but essentially a fair value gap is used to detect market inefficiencies or imbalances, and then these imbalances arise when the market displaces in one direction, leaving behind inefficiencies in the market. The idea behind fair value gaps is that the market will usually come back to fill these inefficiencies before continuing the expected impulsive move. So then here's the logic behind the strategy or the strategy breakdown. Basically, one time frame, the 4 hour, is high enough that the majority of the time you'll be trading with the daily momentum. So yeah, like I said, essentially a version of the ICT 2022 model, but refined for the higher time frame and swing trading. So let's take a look at some examples. Here is the trading checklist that you guys can keep with you whilst trading. Make sure obviously every one of these points is ticked off before entering a trade. Like I said, within my community, there's a few more points that I do go into detail with, and obviously a lot more pages discussing different aspects of this strategy, but you can make the most of this strategy with just this trading plan, of course. This is the strategy breakdown like you just seen, but essentially what I've marked out here with these gray boxes are our dealing ranges. Okay, so what we're looking for obviously is, a trending market, clear market structure, obviously swing high, swing low, swing high, swing low, swing high, swing low, a lower low, a lower high, a lower low, a lower high, a lower low, and then obviously when a lower high is taken out, we get a market structure shift, and then we trade back into this internal range liquidity here, back into our entry zone, and likely order blocks, fair value gaps, etc., to then take price higher. Essentially, all we're looking for is to enter at either of these levels with stops at the low and then a target at the high. We're not looking to take it beyond this high because this is the highest probability. We could just sweep this high and continue lower. Many years of experience and many hours of backtesting, that is what I found is the lowest hanging fruit, and that is what we should target to have the highest probability of our take profits being hit. So 2.4R from the 0.7 or about 3.7, 3.8 from the 0.79. But yeah, essentially this is it. This is the dealing range. We want to draw out our dealing ranges, and essentially what we're looking for here is we're not looking to do anything until we get a sweep of liquidity. So here we've obviously swept this low, and then displacement, market structure shift above this high, and then we're looking to then get in if there's a fair value gap here and discount to then take it higher. Okay, but obviously entries are always at the fib levels, as I've mentioned previously. So if we take a look at some examples, of this setup playing out. We jump down onto the 4 hour here on GU. We can see this setup here, obviously recent one that's just about to hit profit at time of recording this. We've obviously got a sweep of this low, or we can map out our market structure first. We can see lower high to lower low. This lower high wasn't really created from a sweep of liquidity. We didn't sweep these highs. Yeah, there's some internal highs in here, but we kind of moved lower and then swept these lows before displacing higher, traded back into the 0.7 fib, which is where we'll be looking to set an entry here, and then obviously stop loss below, and then targeting that high. Like I said, just about to hit take profit on that one for about 2.4 R. But essentially the logic here is obviously this is our dealing range. This dealing range was created from this displacement here, but it wasn't created after a sweep of liquidity, unless you count obviously these internal highs here as a sweep. But for me, we displaced lower, traded higher, and then we created this new low. Once we create that new low, we can draw in our new dealing range here from the most recent lower high to the most recent lower low. And then obviously there wasn't a sweep of liquidity here before we created the low, so we're not looking to take any shorts. We then displace higher, breaking market structure, so therefore we can draw in a break of market structure here, and then we can look at getting into a long position once price starts retracing. So we anchor here from the sweep of liquidity. Obviously here was the sweep of this low, sell side liquidity swept here, and then we displaced higher, traded back into internal range liquidity, into this huge fair value gap here, mitigated that fair value gap as you can see, and then price moved higher for 2.4 R. Take a look at the next example. Here we've got an example of a loss, an example of a winner. Okay, so here on Aussie Yen, ignore this breaker structure. This is for the next trade scenario. But what we can see here is obviously price has created this low, lower high, and then obviously these highs then created a lower low. This was created after sweeping this high. So obviously that's a sweep of liquidity, tick, break of market structure, tick. There's obviously fair value gap in here that overlaps within our premium pricing. Price trades into 0.7 or 0.79 where we are then entered into the market. And unless moving to break even, I personally did on this setup. But unless you did, then this would have been a loss on that one. So full loss on that Aussie Yen. But it's fine because that move up there that created that move came from a sweep of liquidity here. Okay, so we created this new dealing range. After this being our previous dealing range, we don't do anything until that dealing range is taken out. We then created a new dealing range, and this was created after a sweep of liquidity. So price moved higher, clear fair value gaps in here in discount. Price moved back into our entry zone, which we were tagged in. Price moved up to target for 2.4 R once again. And this setup does work on indices as well, for those of you that want to trade the S&P, NASDAQ, the Dow, etc. Here is an example on the S&P. So we had a sweep of liquidity before we moved higher, break in structure. We then traded back into value here, obviously anchoring at the sweep of liquidity to the high, trade back into internal range liquidity, tap into our entry zone, and it moves higher for 2.4 R. Again, another example of a short. Here we swept this high, the high of the sweep to the low that breaks market structure. Obviously this would have been our previous dealing range. We then broke the high, therefore we can move our previous dealing range to there. The sweep of the high, but then we obviously break market structure. We trade back into value, mitigate this fair value gap, which aligns with our 0.79 with our 0.7 fib. And then we trade lower with just one candle hitting our take profit there for 2.4 R. Again, obviously we can trade indices, we can trade forex, we can also trade gold. Okay, so here's an example on gold. Obviously gold's been in a huge bull market at the moment, so really textbook example here, catching the momentum higher. What we've seen was a break of structure. Obviously this was the previous high. We took that out with displacement, leaving fair value gaps in here. Sweep of this low, obviously this is the low of the sweep, drives higher, price trades back into, mitigate this fair value gap, back into our entry zone, and price moves higher for 2.4 R. Obviously holding that in a bull market like such as gold at the moment would be textbook. That, the likes of Bitcoin as well would be fantastic. But, the fixed trade, the rules are to trade from these areas here. Aussie CAD, another forex example. So here if we go back, we can see that we had a clear setup here, sweep of liquidity, drive breaking this previous market structure, and then traded back into our entry zone, went lower for 2.4R. Here you can see two setups occurring together, and these setups are completely mechanical, okay? Once you get in the community, you see our mechanical rules of how we determine market structure. I'm not picking these trades out of thin air. We are just mapping market structure and reacting to that. So here, we created this low, we then created a lower high, we then created another low, but we didn't displace through this low, so it was a sweep of liquidity. We displaced through this high, which created this low, meaning we had a break of structure. We traded back into internal range liquidity, into this fair value gap, which was mitigated at our entry zone of our fib levels, price traded higher, hitting target 2.4. Then obviously this new dealing range was created. We obviously had this inefficiency here, so we can get into longs if our entry zone is reached, sweep of liquidity, entry zone reached, another 2.4R. Another example, going back a little bit further on Aussie CAD. So this pair's performed really, really well recently. This goes back to October last year. But here we had a sweep of liquidity, break of structure higher. Again, same thing happened. We've got fair value gaps in here, clear displacement, traded back into our entry zone and ran higher for 2.4R. But let's take a look at some other pairs, take a look at some examples of some losses, some examples here of a trade that didn't get tagged in, sweep of liquidity recently. So this was a trade we had on watch this week. It didn't reach our entry zone, but created a new dealing range, busting through taking out these lows, and therefore we take this off of watch, and that was just a trade that wasn't triggered. Previous to that, we had a trade that we had open for quite some time, but eventually hit target for 2.4R on that one. And then Pound Aussie, another example. So this trade was entered at the same time as that Euro Aussie trade, or that Euro Aussie example. But here, obviously, same kind of thing. Sweep of liquidity, traded lower, breaking market structure, traded back into internal range liquidity, filled these inefficiencies into our entry zone, traded lower, hitting target. Here is an example of a loss. Sweep of liquidity, break of structure, traded back into our entry zone. It held for, maybe a day here, Wednesday to Thursday, and then our stop loss was hit. So that was a loss there on Pound Aussie. Going back further, back to December, here you can see sweep of liquidity, followed by a break of structure, followed by a return to our entry zone, followed by a target hit there on that one. But then this is why we trade a range of FX pairs, why we trade indices, why we trade gold, because here we didn't have any valid setups during this whole time here. So from December all the way to February, so 2 months here, we didn't get another valid setup. But that's fine because we make use of the other pairs that we have on watch. And obviously there's plenty of trades examples, and that's how we've got members hitting 15, 20R months in the group. So here we've got another example on Pound Yen, a trade that's currently open, depending on where you entered from, 3.8 or 2.4R. Targeting this high, looks likely that will be hit now. But then going back previously, the last trade on Pound Yen, so that was 22nd of March, that was entered. And then this one was the 2nd of Feb. So over a month without a trade, and the previous trade was a loss. So we had a sweep of liquidity, a break of structure, traded back into internal range liquidity. But unfortunately, this high was then taken, and obviously these lows weren't met, and we had a reversal. Therefore, that was a full loss there on Pound Yen. So yeah, I hope this video was helpful for you guys. Super simple strategy to apply, super simple to learn, and obviously very minimal chart time today. You can do this with 15 minutes, 30 minutes chart time a day max. Obviously back testing is going to be beneficial for you. Within my group, I do give access to the members for the data tracking sheet with every valid trade that happens across the market. I put it into the data tracking sheet so that we can all track the performance of this strategy. So if you want to join a community at a hugely discounted price, especially for the value provided, you'll get access to obviously my 2 strategies with trading plans and the video course to go with it, daily live trading sessions during London and New York, access to my personal trades and journal, weekly swing trading outlook videos, trade recaps, and a thriving community of fellow traders. Then hit the link below, get involved before I either close the doors or increase the price dramatically.